Welcome back to Trading Hour on CNBC TV18. Well, let's shift focus to the primary market action now. We had a new listing today. Inox Green Energy made a subdued debut on the Lal Street. The stock listed at a discount of 7.5% at about 60 rupees versus the issue price of 65 per share. To discuss the listing, the company's plans going forward, we're joined by Devansh Jain, the Executive Director at the INOXGFL Group. Devansh, good morning and thanks for joining us on the show. I want to first start by asking you about the total debt on your books. Now that the stock has listed, can you take us through what the plan is to bring down the debt post the IPO?
Sure. Good morning, Reema and Sonia. Pleasure to be on CNBC. Sure. So we've got about 790 crores of debt as of 31st March 2022. 370 is going to get repaid by the primary proceeds of the IPO. What that would leave us with is approximately 420. Over the course of the year, we've sold 4 SPVs, 3 to Adani and 1 to Torrent. We've recovered majority of the 100 odd crores which was to be recovered there. What is left for us to now action out is sale of the last SPV, which would be downsold in the near future for about 300 odd crores. So broadly, what we're aiming for is to make this company a net debt-free entity in the very near future.
When you talk about very near future, from 700 crores thereabouts, how much can you bring it down by, say, in the next 1 year, by the end of FY24?
Oh, within the next 1 year, we'll be zero. Yeah. Certainly, we'll be zero within the next 1 year.
Do you think you will be able to action the sale of your last...
Look, so out of the 790, as I mentioned,
yes. Go ahead.
We've already cleaned up 370, right,
correct,
from the IPO. So what we are left with is about 420. 100 odd has already been recovered by way of sale of the 4 SPVs. So what we are left with to clear up is roughly 300 odd crores. And that will get cleared by sale of the last SPV. So we've already sold 4 such SPVs, 3 to Adani and 1 to Torrent over the course of this year. The last SPV is also expected to be sold in the near future. And with that, Inox Green becomes a net debt-free company.
Do you think you will be able to sell the last SPV before the close of this fiscal year? And who are you in conversations with? I mean, how far have the negotiations proceeded?
Look, I'm sorry, I can't give... Look, frankly speaking, I think we're in touch with multiple parties is all that I can say. Okay. And given the fact that we've already downsold 4 SPVs, it's a fairly straightforward job selling the last SPV of 50 megawatts. It's not rocket science, frankly speaking. Okay. I think we should be done with that very soon.
You're confident it will help you net 300 crore rupees, right? That valuation, the discovery of the pricing is done.
Absolutely.
Okay,
you know, so thumb rule, all the SPVs we've sold have roughly gone at about 6 crores a megawatt. Okay. And typically, you know, when you sell a turbine, a turnkey turbine in India, for the existing platform of 2 megawatts, it's about approximately 6 crores. Now, someone may pay 5.9, someone may 6.15, but give or take 5%, we'll be at approximately 300 crores for the last SPV.
Okay. Can you tell us a little bit about the ordering activity as well? What's the trend that you're looking like across wind projects? And what kind of order visibility do you have for the next 1 to 2 years?
Look, I'll talk about wind first and then I'll come to green. So, sure. You know, I think we're seeing the sector coming back very, very strongly after almost 4.5 years of a very painful transition from feed-in tariffs to auctions. We are very, very bullish. I think all the 3 segments of the market, which is IPPs, public sector enterprises, and the retail captive third-party market, I think all of them are firing on all cylinders. The larger goal, obviously, is 500 gigawatts by 2030, of which wind is 175 gigawatts. And we're presently at 42 gigs. So we're really talking of 4xing the sector or 16 gigawatts per annum. Now, you know, whether we achieve 40% of that target or 70% of that target, the sheer numbers are massive. And I think what's also happened is after the whole painful transition, there's been significant consolidation in the OEM segment. So from an Indian context, we probably have just 2 Indian OEMs who've survived and maybe 2 or 3 foreign OEMs. So we've already almost seen 30 OEMs go bust or exit the sector. It's become a seller's market. I think naturally inventory issues have been cleared up. So people are now going to make turbines and sell turbines only to make money, not to make losses, frankly speaking. Secondly, I think there's also been a significant realization that tariffs need to be realistic. This is not a lottery system where someone bids 3, you make it 280, then 260, then 250. You make it free, you're never going to be able to make a return. So I think we've seen tariffs now stabilize at about 2.8 to about 3.1. And I think around 3 rupees is where tariffs really need to be to give reasonable returns to IPPs, also get lenders to lend to these people, and obviously as OEMs, us be making money. And I think we're seeing significant traction and logic prevailing now in all the auctions.
You know, the reason I was asking you about the ordering activity is because, you know, you have seen this sharp escalation in raw material prices. So there was a big drawdown in the renewable energy space in terms of fresh orders. You think that is still a concern, and what do you see as the way forward?
So I think on the wind side of things, yes, there was a significant jump, but frankly speaking, all of us had inventories which had to be cleared up when the sector shut down. So frankly speaking, those came in at X price and not say 1.2x price. So we kind of absorbed that, you know, got rid of that across OEMs who survived, took the hit. I think where people have faced a lot of heat is on the solar side of things, because, you know, panel prices went from say 30 to 25 to 20, and people were, you know, it was like a lottery system, as I said. People were expecting to be at 18 cents. And they were bidding on that basis. And on the contrary, it went up to almost 28, 30 cents a kilowatt. So frankly speaking, I think we're seeing a significant hit on solar installations in India. I think on the wind side of things, the sector's only coming back now. And I think, as I mentioned, people who've survived, they're just strong. They're getting stronger. For example, ourselves now, post this IPO and the promoter infusion, we're aiming to make the consolidated wind business a net debt-free entity in the near future. And I think, you know, it should bode very, very well for us to capture the growth which comes up in the sector as we move forward.
Devansh, a number, please. What percentage of your orders on hand is currently dependent on your parent, Inox Wind?
So let me just explain what we do at Green. So we are doing O&M services. Now we have a 3 gigawatt fleet, approximately 3 gigawatt fleet already contracted at the Inox Green level. So that has nothing to do with Inox Wind. Now this 3 gigawatt is a long-term annuity business operating at almost 50% EBIT margins. And these have built-in escalation clauses of approximately 5% per annum. So to that extent, Inox Green, God willing, will keep making these revenues and growing with the built-in escalations for the, say, next 20 years. That's number one. What we have with Inox Wind in terms of, we have a synergistic exclusive relationship wherein whatever turbines Inox Wind sells, those O&M contracts come into Inox Green. And presently, Inox Wind has has an order book of approximately 1,300 megawatts, which as and when it keeps executing, those orders will come into Inox Green for further growth. And thirdly, at Inox Green, we're looking at significant inorganic growth opportunities. So, you know, when the sector shut down, we've got almost 12 gigawatts of fleet out there out of the 42 installed fleet in India. And this 12 gigawatt of fleet is where OEMs have gone bust or exited. And these are all primarily being serviced by unorganized players. So we are extremely focused and bullish about acquiring a significant chunk of that play in the market.
If you look at the last 3 years, right, I'm just talking about pure financials, your revenues have not grown. I mean, between FY20 and FY22, it's been largely flat between 160 to 170 crores. So that's where I think the street is a bit disappointed as well. The stock is down almost 9%. What kind of revenue growth can you eke out, say, over the next 1 to 2 years? Will it be in single digit? Are you looking at double digit?
Look, frankly speaking, we've grown this company at a CAGR of 40% since inception over the past 9 years. And this includes the period when the sector shut down, including the past 4 years, right? When the sector was going through a painful transition. And then, of course, COVID came in for the past year and a half. Now, if we exclude that, we'll probably be growing at about 60%. So yes, I am well aware of the fact that for the past 3 years, our revenues have typically gone up by only about 10%, which translates to about 150, 200 megawatts of capacity being added. That's primarily because for the past 2 years, thanks to COVID, for almost a year and a half, we were doing nothing. We were just surviving, waiting for the good days to come. And about a year was the transition pain. So for the past 2 to 3 years, you've really not seen anything happening in the sector except people going bust and us trying to survive. I think, you know, it's what is important is I think the painful period is over. In the sector, the transition is completely behind us. COVID is, if I may, God willing, say so, behind us. I think we're very bullish about the growth opportunities, and I think that's also going to get reflected at the Inox Wind level, where you are going to see significant traction in terms of top line and profitability as we move forward. And you'll also be seeing a couple of acquisitions being announced at the Inox Green level in the near future.
No, I take that point
Coming
entirely.
to,
I mean,
I think
Devansh,
the stock price.
No, of course, the stock price is a function of the market, right? It has nothing to do with you running the business. Running the business is your job. But I take your point entirely. I mean, this has been a very tough last couple of years, and just survival in a market like this is a big deal. But yeah, I think Rima has one follow-up question.
Just one final question. Do you think you will be profitable?
Sure.
In Q1, you made a loss.
So, Rima, I won't give forward-looking statements, but God willing, with the new financial year, we will be profitable for always, for all times to come.
So, FY24 will be profitable, right? That's the new financial year talking about?
For sure.
Okay.
For sure. For sure.
You're not committing about this financial year, but we'll leave
So, we clean up all our debt. So, once we clean up the debt,
Okay.
As you know, we operate at about 50% margins, and all of that translates into profitability, given that there is zero capex in this business.
Okay. All right, Devansh, we leave it at that. All the best, and thanks a lot for joining in. That is the listing of Inox Green. It's been a disappointment.